Good morning and happy Feel Good Financial Friday on this 15th day of July 2022, coming to you live from the 305. As you know, the show must go on, as Mick Jagger once famously said, and we take the show on the road. From Midtown Miami today, with me, co-host extraordinaire as always, Sam Castellan, real estate crypto expert, and Kim Lanciel, financial literacy consultant. Sort of a boring week in the market as far as equity markets go. A lot of volatility, but sort of near where we were earlier in the week. It has not been a boring week in fixed income markets, as we have had a en fuego CPI number reported 2 days ago, 9.1%. It made headlines around the country, of course. 9.1% year-over-year change, hottest since 1981. PPI yesterday did not disappoint, came in over 11%. So the question remains, and it's a question for everyone, are we in a recession? Kim, you want to start us off and take that one and tell us from the streets of Charlotte,
I am
704.
I am in the 704.
Are we in
city.
a recession?
You know what? That's what I'm feeling. I think that's what people around me are feeling, and that's what I'm reading about. So reason is that there's been a lot of talk about people are actually falling behind on their bills. And what happens when people fall behind on their bills? It's not good. It's not good at all. Some of the reasons is that the staples that they're buying at the supermarket, they're putting on credit cards. We've talked about that before. Flour is up, gas is up, butter is up. Again, all staples that we definitely we all need. So what are people doing? They're cutting back. A lot of meat, all up. It's all up. So people are kind of adjusting what they got on their shopping list. People are trying to avoid anything that is really costly and really hard. But the news is not necessarily that good for all of us. So there's always different ways that we can handle it, and people that are having those issues can handle it as well. Not fun. I'd actually kind of borderline depressing. Is it a recession? Again, kind of seems like it. But we have to understand that when we take these steps, they're all different for everybody else. So one thing that I've kind of noticed that I do is that I've actually gone through my credit card statements a little more closely these last couple of months, even like this last week. And I'm looking for things
Always good advice.
Always good advice. And you know what? We forget about that. We get comfortable, we get complacent, and we don't want to do it because it's not fun. It's not fun at all. So things that like streamlining services that, you know what, I'm not using anymore. There's certain things that I forgot that was on my credit card bill, even once a year. You know, I get $150 ding from one of the virus protection softwares. I'm not using it because guess what? That computer's gone. Bad on me for not remembering to delete that and to, eliminate that subscription. But it's not sometimes kind of hard and definitely very frustrating. So those are some changes that, we can all make. And guess what? Money. People are making pretty decent money nowadays, but I guess there's ways that we can do things that we can do just a little bit more. And some advice that I've been hearing about, and I've actually recommended to people around me, go and ask for that raise. Not an easy conversation. Prepare yourself for that. Have your numbers all in a row. You might be surprised that you might actually get that. Apparently, somewhere of 60% of people are actually eligible for raises. If you look at the bottom dollar for corporations, nonprofits, any types of organizations, but people just don't make that step in trying to do it. But I recommend that you try to do that. So, you know what? The Great Resignation is still all around us. There's a lot of people quitting their jobs. So there's jobs are, still quite plentiful, and we can see that in the numbers. So I recommend taking some couple of, difficult steps and make yourself in a better financial situation.
We highlighted last week, Jobs Number Friday. Jobs are still plentiful out there. So what great advice, asking for a raise, very timely. As always, thank you, Kim. Sam, I know the mortgage rates have sort of settled in here around 5.5% for 30-year fixed, really between 5.3 and 5.6 I've seen all week. What can you tell us out there? Because, things seem to be cooling down.
So George, I can tell you that the quote from this week is like, sellers beware. because we're seeing a reverse in the trend of real estate right now, George. And so the US home buyers are backing off from deals at the highest rate since the start of the pandemic. And basically today, I just want to talk about that reverse on the trend, because what we're seeing is, given the higher interest rates, and more importantly, the fact that many people are going back to work from the office, like when the pandemic started and everyone was working remotely, there was a massive trend of like people going out from the major cities into like the secondary surrounding markets. Now we're seeing those numbers go back. And so as people are coming back to the cities, all these secondary markets that are, like, to give you one example, right? Like for instance, Sacramento, that is like an hour from San Francisco, where people started buying homes like crazy. Now those home prices in cities like that, they're like dropping prices like 40, 50, even to 60%. So it's really crazy what's going on. And so we're seeing that market trend reversal, and it's significantly affecting secondary markets and, increasing the prices in the major cities.
Yeah, the news came out earlier in the week that 15% of all real estate deals were canceled.
Yep.
This is residential, real estate deals in the month of June. 15%
Wow.
were canceled, where mostly buyer, just walked away. So, listen, the activity is slowing. When rates have done what they've done, I mentioned the hot CPI PPI number. Fixed income markets yield inversion continued this week. So now you get the 1 year almost higher than the 10-year, but the 2-year is well above, 3-year well above. So that continues, and that is historically been a sign for recession.
Yeah.
It is mid-July. It's British Open week in the sports world. We got a crowded leaderboard at the 150th playing in St. Andrews, the home of golf. I know where Kim is, about 300 yards away. We're going to have a big soccer game in a few nights. Wednesday night, English Premier League. Chelsea is in town playing Charlotte FC. So, it may not be football season, basketball, but sports world continues. Everyone have a great weekend. Till next time, adios.